Hi, good morning, friends. Today we've got an update regarding mutual fund which invests in defense-related stocks. As you may be aware, that the current position of India's defense exposure has grown, and India over the next 20-22 years, before we reach the 2047 target that has been set up by the Prime Minister and also by the Home State Affairs Ministry and Home Affairs Minister to ensure that India is a well developed country by 2047. So, based on that we have projected targets for the defense industry to grow to by about 500% from the current levels that we are at. So, managing investments in defense stocks directly can be difficult to manage, and especially not having 100% expertise and knowledge about managing stocks in certain segments and sectors could be difficult. So there is a possible write-up that we've got for you today regarding managing your investments in defense mutual funds. So we can have a look and see if you all would be looking to add this as a portfolio, especially when we're looking at about 500% growth in our defense budgets and overall defense spending, and becoming a top export, uh, or adding more defense exports to our portfolio, especially to countries trying to use their defense systems to integrate missiles with capable multi-layered defense systems. So India could play a very vital role in defense exports over the next few years, and definitely with the upcoming or the ongoing conflicts and wars around the Middle East in and the war between Russia and Ukraine is definitely going to be something that would give an opportunity for a lot of countries to develop their defense exports. So India would be beneficial as the exposure we've got with the recent war with Pakistan is definitely going to add a lot of value to the sentiments of the overall people in in India and the decision makers in various other countries who are trying to improve their defense equipment. So overall, these mutual funds, thematic known as thematic defense mutual funds. So these funds collect money from many investors and invest in a mixed bag of company involved in defense manufacturing, aerospace, security, and related sectors that often see strong government support. By choosing a defense mutual funds, investors can benefit from growth of India's defense industry without needing to pick individual stocks so large or invest in large amounts. These funds are managed by experts and spread the risk by investing in several companies. This makes them a good option for investors who want to be a part of the growing sector with less effort and lower risk. The defense funds are Motilal Oswal Nifty India Defence Fund. Then we have HDFC Mutual Fund, HDFC Defence Fund. Sorry. So we'll go through the HDFC Defence Fund. I've managed to get some information here for you. So the HDFC Defence Fund primarily investments equity and equity-related securities of companies in the defense sector. As of May 31st, 2025, the fund has 6,665 crores in assets under the management, some of which total holdings include Bharat Electronics, Hindustan Aeronautics, Solar Industries India. The fund also has exposures to companies like BEML, Astra Microwave Products, and Bharat Forge, a large public sector enterprise. BEL, Hindustan Aeronautics, a major aerospace and defense company in India. Then Solar Industries, a manufacturer of industrial explosive propellants and related products serving the defense and the mining sectors. BML, a public manufacturer sector involved in manufacturing heavy earth moving equipment, defense products, and rail coaches. Astra Microwave Products Limited, a company specializing in design and the manufacture of microwave components, subsystems, and systems for defense and aerospace applications. Other notable holdings: Cyient TML Limited, a company providing design, engineering and manufacturing solutions for the aerospace and defense industries; Premier Explosives Limited, a commercial explosives and defense products manufacturing company; Bharat Forge, a company involved in manufacturing forged components for automotive, aerospace and defense industries; Interglobe Aviation, when primarily known for its airline operations, it also has a defense division. Important consideration: the fund has a very high riskometer, reflecting the inherent volatility associated with investing in these defense sector funds or companies. HDFC Mutual Fund has previously restricted new SIP registration and lump sum investments in this fund due to valuation concerns. The fund's performance is benchmarked against the Nifty India Defence Trier. So let us look at one more fund, Aditya Birla. Okay, let us look at this, see if we can get some information that would be helpful. There we go. Okay. Mm, the current fund has an asset of 4 lakh crores, and the latest NAV is 12.58. The Aditya Birla Sun Life Nifty India Defence Index Fund's growth is rated at a very high risk. Minimum SIP investment is 500 and the minimum lump sum investment is 500 as well. What is the return? Okay, so the current NAV asset value of Aditya Birla Sun Life Nifty India Defence Fund regular plan is 1280. Growth returns is trailing returns over different time periods are 26-27% since its launch. So about 27% return that the company has provided, the fund has provided. Sorry, the exit load. Okay, this is one. We can look at another one, which is Motilal Oswal Nifty India. Okay, we'll see if we can get information on Motilal Oswal Defense Fund. Alright, there we go. So, Motilal Oswal has 18% BEL, 18.6% BEL, 18% Hindustan Aeronautics Limited, Solar Industries 16%. So it seems to be having a good high value. Current defense fund NAV is 1152 as of 12th of June 2025. The scheme seeks to provide returns before expenses correspond to the total return of the securities as represented by the Nifty India Defence Fund. Comprises 99.94% in equities and 0.0% in debt. So, friends, if you've got an overview of the different companies and how the fund is calculated the value and how the volume growth has performed. These are some of the things that you can check with the with the possible returns that the mutual fund difference indices provide. So something that you can keep a track of and look at. Let us see if there's any other information that we can give you. So this particular index fund currently has 11.26 as the net asset value per unit. Fund manages assets for 2,875 crores and it has an expense ratio of 1.1% for the regular plan. Return since launch is 12.63%, reflecting consistent performance aligned with its investment objective. They do have an exit load of 1% if redeemed within 15 days, and the minimum investment is 500 and the minimum SIP is 500 again. So 20% Hindustan Aeronautics Limited, 20% BEL, Solar Industries 16%, Mazagon Docks 7.5%, Cochin Shipyard 7.2%, Bharat Dynamics 6%, Zen Technologies 4.3%. Then we've seen the HDFC Defence Fund. Again, the expense ratio is high here, 1.78% for the regular plan. The return since launch is 57%, reflecting consistent performance aligned with its investment objective. However, you need to keep in mind is the return of 57% since launch cannot meet the same expectations because the value of this current stock is already inflated and it's at a very high value. So any further growth from here on is something that is not consistent and reliable. It depends on the performance of the individual stock and how the company performs. It the overall uh, business that it generates, the revenue growth and the profit growth. So the stock of the value of the stock would only grow if the revenue grows beyond a certain point and it exceeds the expectations of the market and the stock exchanges. So if a particular company like BEL is expected to have a revenue growth of 15 to 20%, and in the past, in the last 2 quarters, it has achieved about 15%, and the net profit, maybe they've gained about 6 7% net profit on the previous quarter or previous year. Then if they get an additional net profit increment of 10 to 15% from their previous net profit. So suppose previous quarter the net profit was 200 crores, and this quarter they were expecting about 7 8% growth, which would be a net profit of 215 crores or thereabout, and the company achieves 230 crores of net profit. And further in the next quarter, the company is expected to reach 250 crores of net profit per quarter. So that will make the company add more value because the sentiment would be exceeded. People are expecting a return of 7 8%, and the company is delivering a return of 15% or 12%. That would indirectly increase the value of the company, and that will translate into uh, value addition to the portfolio. So that is how it is calculated, and the returns that the fund would give would be based on the stock that they hold. And as I said, if the price of the stock adds value, overall your portfolio in the mutual fund will also grow accordingly. So after keeping in mind the basics of the basic expenses that they will take care of, and based on that there would be returns calculated. So uh, investing through mutual funds give you the diversity to invest overall in different stocks in the same sector segment, and different companies or different sectors together. So that gives you the advantage of having some of the best stocks in your portfolio in a particular sector or over a diversified stock index like the Sensex or the Nifty 50, which has the top 50 companies from various different industries. So funds which invest in those kind of stocks would have high valuations, and the possibility of fluctuations in the price and the value would also be pretty high. So uh, again, returns on high value stocks may not be something that may happen uh, immediately. So if you're looking at getting value and adding value to your portfolio, you should be looking at investments beyond 3 to 5 years at least, and uh, those would fluctuate and would add value over a long period of time. So uh, temporary spurts of growth, it may be good. However, to have a consistent amount of value addition, keeping all the stocks in mind and how they perform over a period of time is important. So even if you're holding stocks in the mutual fund in any sort of category, to monitor this on a periodic basis is also very important. So I hope this information would be helpful for you. It is a way of diversifying your overall portfolio investments. It would consolidate into uh, a particular sector rather than particular stock, and the returns may be varied considering that the growth is going to be across the different sector. uh, the growth in one company may be higher than the growth in the other company. So the fund manager would keep a track of this and would know when and how to make investments, trying to get the best value and ensuring that there is less risk involved. Uh, and they don't invest into stocks which would give negative returns. So there is a possibility of stock market corrections, and there is a possibility that you invest 10 rupees today and there is a market correction and your value goes down from 10 rupees to 9.5 rupees. But as I said, if you keep your holdings invested for a long period of time, possibly a minimum of 3 years, and higher than that, then definitely you will see there will be growth over a period of time. It could happen after 3 years, it could happen after 6 months. Some stocks could give you returns after 2 months as well. Again, the fund managers know best, keeping track of the market and whatever sentiments that are happening across the world, impacting the stock market and the stocks. They would be able to manage your investments well. So thank you for watching, friends. We'll connect with another video very soon. Wish you a happy week ahead. Please share this information with anyone who would be interested in learning about how mutual funds invest in the stock market, and also how the funds can be varied in proportion according to the sector, which will at the end of the day give you the necessary returns as and when required. So thank you for watching once again. We'll connect with another video very soon, as I said, maybe tomorrow, and we'll request you to share this with everyone. Thank you.